Today, our first guest is Silvia PAVONI, founding editor of Sustainable Views at Financial Times, a platform that provides information on developments in sustainability policy and regulation, the impact of ESG factors on capital markets, and the transition to a green and just economy. Silvia has been with the FT for 17 years and has been on assignment to over 24 countries. Silvia is also an advisory board member of the European Risk Management Council, a member of the London Council of Not-for-Profit WIL, Women in Leadership in Latin America, and an honorary fellow at the Economics Department at the City University of London. Silvia, welcome. What an honor. Thank you for being with us today.
Thank you so much. Thank you for inviting me. It's a pleasure.
Let's start with an overview of the landscape. What do you see on the investors' agenda? What does the investment community want? What are their concerns these days?
There are many concerns. So clearly sustainability is on everyone's minds, starting from investors, as you are mentioning, but also asset managers, bankers, and companies, of course, not to mention governments and policymakers as well. So I think everyone is really trying to get their heads around how to tackle a problem that is facing humanity, quite frankly, which is climate change, and also trying to put together a way in which capitalism can work better and for everyone. So these are the big ambitions. Now, as usual, the devil is in the detail. And so when you start looking at how to implement all these big ideas, that's where things really get tough. And so I think some of the really big developments that we're seeing are around disclosures. Definitions first around what is, for example, a green asset, but also an asset that is considered of having social value. And so we have taxonomies, for example, being created by the EU, but also other jurisdictions, including the UK, now looking at creating similar taxonomies and definitions. And then we have disclosure. So there is a whole body of frameworks and standards that have been created over the years. And now we also have policymakers and regulators demanding that disclosures and disclosure put together based on specific criteria is enacted. So I think that one of the developments that's, and then I'll wait for the next question, but if you let me talk, I can just talk for ages about this. But one of the big developments and much anticipated developments is coming when it comes to disclosures. It's coming from the International Accounting Standards Setter, IFRS, who last year during COP26 announced the creation of the International Sustainability Standards Board. And now the ISSB has come out with two proposals, which are out for consultation. So we're really getting close to having standards created by, again, a body that has a wide reach and quite a lot of authority. So I think everyone is hoping that this development is going to sort of point and galvanize efforts towards converging towards a singular or a harmonized, I guess, way of disclosing information that is going to be particularly useful for investors.
This was going to be my next question, exactly where you are. You know, from the formation of the International Sustainability Standards Board to ESG data conversion project recently announced by CalPERS, there's a lot of focus on standardization, and this is actually what we have been looking for all this time. Plus, you know, we have seen discussions regulating ESG rating firms, data providers. So what is the direction of regulators in this context? And I would be interested to hear your view as well as to what disclosure is really measuring. Because, you know, I'm interested whether you think mandatory reporting is the solution to progress on ESG matters, or is this just another box-ticking exercise?
No, of course, it's a really good question, because disclosures and the sort of, you know, creating a standardized way of talking about ESG, I guess, is going to be the sustainability language that really everyone will have to learn. but at the same time, you have a different kind of speed and weight maybe being thrown around by regulators around this aspect. So we have Europe with the EU, which traditionally tends to be a little bit more assertive when it comes to directing markets, so to speak. And the EU is already mandating actually disclosures when it comes to sustainability, and it's working on specific disclosure standards. So these are going to be separate from anything that is out there, including what the ISSB is working on. But at the same time, we have all these big bodies. So the European Commission, ISSB, other organizations that have created standards such as GRI, TCFD. The alphabet soup is almost never ending and always expanding. They're all talking, hopefully trying to come up with something that is going to unify and bring together all their efforts. And this obviously is true also for other jurisdictions, including the US, which until now hasn't really paid great attention to climate-related factors and sustainability disclosures. But now we know that the US SEC, so the Securities and Exchange Commission, has put out a proposal exactly on this, on disclosing and mandating climate-related disclosures. So things are moving, are progressing. Whether forcing companies to disclose is the right way to go, I mean, it depends on who you ask. I mean, I think it would definitely be good to have transparency and to have a unified way of talking about ESG, so using similar frameworks. But of course, disclosure is not the silver bullet. So in Sustainable Views, we actually published recently a really interesting, I think, opinion piece by an academic, Alison Taylor, from NYU Stern Business School. And she was comparing climate disclosure, for example, with rules that the force restaurant chains in the UK, but also in the US, to disclose calories, right? The calorie counts on menus. And so this is a really interesting analogy, because of course you have the information, so in theory you're going to use the information to take good decisions, but then in the US, where this rule has been going on for some time, they actually haven't seen any palpable results when it comes to people's health. And so having information doesn't necessarily mean that your behavior is going to change. So instead of sugar, you may want to have saccharin, but that doesn't mean that it's not a positive contribution to your diet. In the same way, reducing your carbon footprint, to get there, you may want to use a carbon offset, but it doesn't mean that your company is actually radically changing its business model.
Yeah, it really is down to how much the companies are really valuing and embracing all that transition with an objective of really giving back to the resources and giving back to the society, I guess. And there are examples like you mentioned. I have recently also read another article that Lufthansa was trying to do something similar. Let's now move on to the next question, which is about the next net zero targets. So how are the net zero targets and the transition strategies influencing companies? Do you observe that the corporates really have a sense of how they need to change their business activities? Are there more companies embracing sustainability? Do they place it at the core of their operations? Or is there more focus on marketing? Because it seems to me that companies are more focused on marketing than doing. We tend to read so much about the companies and their articles, and this rising role of chief sustainability officer. It really brings the problem whether this is adding more layers, and it's really dangerous, because greenwashing can potentially lead to litigation, which will hurt your corporate reputation, not to mention the financial risk that comes with it. I would be very happy to hear your views on that.
Yes, so I think more and more companies are coming out with net zero commitments, but you are absolutely right that there is a sense that these commitments now, the companies are going to be held accountable for what they state. So there is a sense that this is coming. So an example of this that supports this kind of feeling, I guess, is a recent review of, again, the European Union's green bond standard, right? So the EU has put together a proposal to define what a green bond should be. And there is a review of that has been commissioned by the European Parliament. And that review suggests to actually include, black on white, a civil liability for issuers that essentially missell these bonds. So, one could argue that anyone who is missold a financial product could sue based on the national law in which this person is based and the product was sold. But having that inclusion, I think, in a document about green bonds really reinforced the idea that companies are going to be held accountable for what they say. So I think everyone now is paying more attention to what they say, to what these targets are, and to the fact that, again, markets, investors, but also I would argue employers and consumers are going to keep an eye on whether they deliver or not. And of course, a lot of these targets are far out in the future. So we're talking in some cases 2050, in some other cases much earlier. So it is definitely, greenwashing is definitely going to continue to be a big concern. And you mentioned the rise of the corporate sustainability officer. And it's very important to see where the CSO actually is based. So is it based in a function like finance? Does he or she report straight into the CEO, and who has ultimate responsibility for this? We actually did a survey in partnership with Egon Zehnder, the recruiter, to see how, who was in charge of the sustainability agenda within various companies across jurisdictions and across industries, and results varied. So there is definitely growing awareness that this has to come from the top, but then the way in which companies organize themselves and share responsibility and place responsibilities on certain roles, it varies. Hopefully it's going to move in the right direction, but you're absolutely right. The greenwashing is a big concern when it comes to all these big statements. At the same time, I think companies will increasingly be called out if they misspeak.
Well, you're absolutely right in that, we have to be very conscious about where we position the Chief Sustainability Officer role, because obviously there are different priorities for each industry. We have different types of companies in terms of their size, in terms of the industry they're operating in, whether they are emerging markets, major markets, whether it's an industrial company or a financial company. But regardless of the organizational structure, what we are promoting as the Turkish Investor Relations Society is that the investor relations role should be involved in setting the strategy, in setting the direction for the company's sustainability roadmap and strategy, because we are the representative of the investment community, who is the main stakeholder that is pushing through these and watching these and embracing these developments more so than the others. And that's why we are working together with both the IR teams and the sustainability teams in our working groups in sustainability. So let's see how successful we are in terms of pushing this thought process through to our companies.
And please do keep me posted on what you find, because I'm very interested in hearing the point of view also of the investor relations community, because yes, you're right, those are the professionals that are talking, that are speaking actually two different languages, the corporate language and the investors' language, and are there to answer questions and present answers. But yeah, it would be fascinating to hear actually what your community thinks about.
Yeah, we will do that for sure. And exactly as you said, we are the ones who need to face the investors and who need to be responding to their questions, who need to be responsible for the responses that are stated in all of our disclosures. So I definitely think it's more of a financial / investor relations role than just the marketing bit. But let's see how things progress, and I will be happy to let you know. Moving on to our next point, I have done some research, and according to McKinsey's latest report, spending on physical assets on the course to net zero is expected to reach around $275 trillion by 2050. And if you look at that on an annual level, it's about $9 trillion per year, which is an annual increase of about $3.5 trillion to what we are spending right now. That's an immensely high number. So how do you think we can mobilize more capital into achieving net zero?
I mean, those figures are just mind-boggling. I mean, you struggle to comprehend how the enormity of what that figure is. Those $275 trillion that you mentioned. So this means that clearly there is a huge investment opportunity because a lot of the infrastructure, a lot of buildings, but also tech infrastructure will have to be adapted. Urban infrastructure as well. The reconfiguration of cities, of connections. There is a lot to be done, and therefore a huge opportunity, a huge investment opportunity. Typically, a lot of these investments tend to be more urgent in markets where investors struggle to see opportunities. So in emerging markets, and so. Talks around the use of blended finance, the need for multilateral institutions, development banks to step in is, I think, is going to be increasingly high. And a lot of them, of course, are already very active in this space. A lot of them are already talking and working to create programs and products that would attract investors to contribute to the development of that infrastructure in places where it is needed the most. And so I think that that's one of the trends that I think we will continue to see, because also there is quite a lot of interest from investors also in potentially looking at those areas, but traditionally they complain that those investments offer sort of a risk profile that doesn't quite match the expectations. And so hopefully we're going to see a greater partnerships rather between multilateral institutions, between development banks, and between private sector investors and lenders.
We do need a lot of partnership, exactly as you said. And maybe just to go a bit more into detail about the potentially available and growing segments. The World Bank, you will remember last year, they had launched the Rhino bond. And of course, we'll see whether this was a one-off type of bond, but it was certainly very interesting to see what kind of instruments will be available going forward. And of course, we are seeing that sustainability-linked bonds are now becoming more popular among issuers. And we are seeing, as you suggested, a significant growth in terms of investor appetite. Again, if we are to suggest certain numbers, environmental finance data suggested that sustainability-linked bond issuance has increased by an impressive 200% in the first quarter of this year only. And during that same time, all other labels have declined. So the SLB market is really expected to grow this year to about $220 billion, and that represents a growth of 135%. But as we have discussed, there are some risks resulting from the insufficient transparency leading to potential greenwashing. So obviously, the EU Green Bond Standard is critical in terms of how the markets will move forward. So what else do you think can be done in terms of integrity, in terms of ensuring the integrity in this area? Because certainly the transparency, accountability, that will be critical for the sustainability of the debt capital markets alone.
No, absolutely. And I think that's, again, it's a really good point. So investors will want to know that they're investing in something that does what it says on the label, right? So sustainability-linked bonds have definitely grown they become much more interesting for issuers. And I think it's for a couple of reasons. So the good reason is that, in the words of the people at Enel, who, as you know, the Italian energy conglomerate, which was one of the pioneers, if not the pioneer, when it comes to private sector sustainability-linked bonds. And so they were saying, of course, we want to do this because we are past the stage in which we want to attract and deploy capital towards individual, specific green projects. We want to show that the whole company is changing, and we want to raise funds on the base of this commitment. Because it is such a wide and broad commitment, and your investors are placing capital next to a plan, essentially, it's much harder to, of course, to check what's happening. It is easier in theory to go and check whether solar panels are being installed on clients' rooftops as promised, or whether a specific green infrastructure was developed. When it comes to the whole company, the structure of the company, things get a little bit more complex. So, which means that on the flip side, then issuers may think, if we want to be a little bit cynical, that they're going to be under less scrutiny if they issue those kind of bonds. So I think those are the two sides of the coin. But there is certainly interest in anything to do with sustainability. The fact that the green bonds standards of the EU is thinking about regulating that area, on the one hand, may provide greater security to investors, because it offers assurance that things are done in a certain way. On the other hand, it may discourage maybe issuers to go through the whole paperwork and bureaucracy and being held accountable for those kind of instruments. So I think it may be a little bit early to tell how the market is going to react. And actually, I'm interested in your point of view as well, in what you think is going to work. But certainly this sustainability-linked debts and other sustainability-linked, broader capital markets products, I think, adding the ESG label on so many other products is becoming quite trendy. They use that term. So I think it's something that will continue to go on. But what do you think? I mean, what do you think? What are you seeing from the market, from the people you speak to?
It's growing. It will continue to grow. I mean, there's certainly a lot of liquidity out there. There's a lot of need for the financing. So I think we just need to build the correct channels. We just need to have the correct instruments. We just need to have the transparent reporting, so that we give the investment community the tools to be able to decide on the right investment. As we do in investor relations. That should definitely be the objective going forward. And we certainly also see that a lot of Turkish companies are going after sustainability or sustainability-linked financing. Great. Let me just finally ask you your views on why sustainability, and we will discuss during the rest of the day whether it is a checklist or not, and what kind of risks and opportunities that come with it. But why do you think sustainability should be more than a checklist?
So, the problem with checklists is that your focus tends just to be on that, on the checklist. And so you miss the bigger picture oftentimes. It is useful because then, of course, you can compare the checklist, and you can have a certain degree of confidence that you've done what you have been asked to do. But I guess that now we are at a stage in which you need to go a little bit beyond that. And so more than a checklist, maybe now this is a question of leadership, of whether companies, but also governments and regulators take decisions, because if you speak to some of even the pioneers in this space, Paul Polman, the former CEO of Unilever, he would tell you that, who is a reader, by the way, of Sustainable Views. I just thought to mention it. I discovered he reads us, which fills me with joy. So he would tell you that we do have technology, the clean technology is developed enough. We do have alternatives. We do have capital and investors interested, and companies also, many companies wanting to do this, but of some leaders, but there is, what we are needing is the willingness to really act and change things. And so change business models, take decisions to avoid certain areas and encourage the development and investment in others. For regulators to take a certain stance on certain other areas, for politicians to, again, drive a country in a certain direction and not in another. So perhaps now, again, we're way beyond the checklist phase, and we are in a place where really decisions need to be taken from the very top. And it's not a matter of being seen as compliant or not any longer. It's just a matter of allowing oneself, I guess, to have a long-term vision and to understand the risks of not acting, rather than focusing again on the day-to-day, on the quarterly results that I'm sure are giving you big headaches as well, and just focusing on the long-term objectives, which are very important and now increasingly urgent.
Why settle with just the reporting when you can, take the opportunity to make history, right? Thank you so much, Silvia, for sharing your thoughts with us today and sharing your time so generously. Hope to see you on other events as well.
Thank you so much. It's been a pleasure talking to you, and best of luck for the rest of the event.
Thank you. Pleasure is ours. Have a good day.